Warren Buffett is among the most successful investors and businessmen ever. He's known for his value investing philosophy, philanthropic efforts, and witty quotes. But what does he think about cryptocurrency, the new and controversial form of digital money that's taken the world by storm?
Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it?
In this video, we'll explore Warren Buffett's views on cryptocurrency, why he's so skeptical about it, how he responds to the arguments of its proponents, and what he advises investors to do instead. But before we dive into the details, make sure you subscribe to our channel and hit the bell icon to get notified of our latest videos on finance and investing. Warren Buffett is not a fan of cryptocurrency. He's repeatedly expressed his negative opinion on it, calling it a mirage, a delusion, a rat poison squared, and even a turd. He believes that cryptocurrency has no intrinsic value, no productive use, and no reliable regulation.
A sure loser for society, for the gamblers on the lottery on the whole, but they're appealing to the gambling instinct, and it spreads. I mean, people love the idea they're going to make more money tomorrow, and it really.
Warren Buffett's main criticism of cryptocurrency is that it's not backed by anything tangible or useful. Unlike stocks, bonds, real estate, or commodities, cryptocurrency generates no income, dividends, rents, or profits. It has no physical form, such as gold or silver, that can be used for other purposes. It has no legal status, such as fiat currency, that can be used for transactions and taxes. It only has value because people believe it has value, which makes it highly speculative and volatile.
But Bitcoin, it's ingenious, and blockchain is important, but Bitcoin has no unique value at all. It doesn't produce anything. You can stare at it all day and no little Bitcoins come out or anything like that. It's a delusion, basically.
Warren Buffett also argues that cryptocurrency is not a true innovation, but rather a repackaging of old ideas that have failed in the past. He compares cryptocurrency to the tulip mania in the 17th century, when people paid absurd prices for tulip bulbs in the Netherlands, only to see them crash later. He also compares cryptocurrency to the dot-com bubble in the late 1990s, when many internet companies with no earnings or prospects soared in value, only to collapse later. He claims that cryptocurrency is just another fad that will eventually fade away.
In terms of cryptocurrencies generally, I can say almost with certainty that they will come to a bad ending. Now,
Warren Buffett's skepticism about cryptocurrency stems from his experience and knowledge of history and human nature. He's seen many bubbles and busts in his long career as an investor and knows how to spot them and avoid them. He also understands how people can get carried away by greed and fear and fall victim to scams and fraud. He warns that cryptocurrency is a fertile ground for such problems, as it's largely unregulated, anonymous, and decentralized. He says that cryptocurrency attracts charlatans, criminals, and gamblers who want to make a quick buck at the expense of others.
The gambling instinct is so strong, and you had millions of people that were getting checks in the money and sitting home and finding out that they could have a roulette wheel in their house, and they had all the appeals of gambling that are used to get people to go to Las Vegas, and you can do it in your home, and they had money, and we've had an explosion of gambling, essentially.
Warren Buffett also challenges the arguments of cryptocurrency enthusiasts who claim that it's a superior form of money to fiat currency or gold. He disputes that cryptocurrency is scarce, durable, portable, divisible, fungible, or stable. He points out that thousands of cryptocurrencies exist, and more can be created at any time, which dilutes their value and undermines their scarcity. He also notes that cryptocurrencies are vulnerable to hacking, theft, loss, or damage, which reduces their durability and portability. He also questions the usability and acceptability of cryptocurrencies as a medium of exchange or a unit of account, as merchants or governments do not widely accept them and fluctuate wildly in price. He also doubts the credibility and security of cryptocurrencies as a store of value or a hedge against inflation, as they have no intrinsic worth or backing by any authority or asset.
By various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else. And they come to an end.
Warren Buffett's counterarguments are based on his understanding and appreciation of the functions and qualities of money. He recognizes that money is not just a physical object or a digital code, but a social and institutional construct that depends on trust, consensus, and coordination. He acknowledges that money is not perfect and that it can be manipulated, devalued, or corrupted by governments or banks. But he also believes that money is essential for the functioning of the economy and society and requires some degree of regulation, standardization, and stability. He argues that cryptocurrency fails to meet these criteria and that it's not a viable or desirable alternative to money.
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all.
So far, we've seen how Warren Buffett expresses his disdain and disbelief for cryptocurrency and how he refutes the claims of its supporters. But what does he advise investors to do instead of buying cryptocurrency? Let's find out. Warren Buffett advises investors to avoid cryptocurrency and invest in productive and valuable assets instead. He recommends investing in stocks, especially those of companies with strong competitive advantages, consistent earnings growth, and reasonable valuations. He also suggests investing in bonds, especially those of high-quality issuers that offer attractive yields and low default risk. He also endorses investing in real estate, especially those properties that generate steady rental income and appreciate over time. He also favors investing in commodities, especially those of resources that have stable demand and supply dynamics.
People behave very peculiarly in terms of the reactions because they're human beings, and they get excited when others get excited, they get greedy when others get greedy, they get fearful when others get fearful, and they'll continue to do so.
Warren Buffett's investment advice is based on his value investing philosophy, which focuses on finding undervalued assets that have the potential to increase in value over time. He applies the principles of fundamental analysis, margin of safety, and compounding interest to identify and evaluate investment opportunities. He also follows the rules of diversification, patience, and discipline to manage his portfolio and minimize risks. He says investing in productive and valuable assets is the best way to create long-term wealth and preserve it. Warren Buffett advises investors to learn from history and avoid following the crowd when investing. He warns that cryptocurrency is a classic example of a speculative bubble that will eventually burst, leaving many investors with huge losses and regrets. He urges investors to be skeptical and rational when evaluating new and trendy investments, not swayed by hype, fear, or greed. He encourages investors to be independent and contrarian when making investment decisions, and not to be influenced by what others do or say. He says investing is not a popularity contest, but a game of skill and judgment. Warren Buffett's investment advice is based on his experience and wisdom as an investor who's witnessed many booms and busts in the market. He's learned from his own mistakes and successes, as well as from the examples of other great investors such as Benjamin Graham, Charlie Munger, and John Templeton. He's developed his style and strategy of investing, which has proven effective and profitable over time. He says investing is not a matter of luck or timing, but knowledge and temperament. Warren Buffett is skeptical about cryptocurrency for a number of reasons. He believes that cryptocurrency is too volatile and that its value is not based on anything tangible. He also believes that cryptocurrency is not regulated and that this makes it a risky investment. Additionally, he believes that cryptocurrency is prone to fraud. In this video, we learned how Warren Buffett views cryptocurrency as a worthless and dangerous investment with no future or merit. We've also learned how he refutes the arguments of cryptocurrency enthusiasts who claim it's a better form of money than fiat currency or gold. We've also learned how he advises investors to invest in productive and valuable assets instead of cryptocurrency, and how he advises them to learn from history and avoid following the crowd when it comes to investing. We hope you enjoyed this video and learned something new. If you did, please give it a thumbs up and share it with your friends. Also, don't forget to subscribe to our channel and hit the bell icon to get notified of our latest videos on finance and investing. If you have any questions or comments about this video, or any other topic related to finance and investing, please leave them below. We would love to hear from you. Thanks for watching, and see you next time.